Welcome to this week's crypto update. So what's been happening this week? What is moving the market? So first and foremost, I think what summarizes this week is absolutely this. Stock market investors are getting greedy fast. Volatility has collapsed as bulls turn aggressive. So all along, and certainly in the last number of weeks, it was doom and gloom. They were talking about recession, they were talking about stagflation, and the chance of recession were climbing dramatically. Then all of a sudden we get a little bit of a pump, and all of a sudden we're back to the races, and everyone's going mad for the stock market and crypto again. It appears to me that sentiment is literally bouncing around at the most extreme and quickest levels that we've ever seen it in the crypto space. This is worth bearing in mind. But what has been happening? So we've seen that historic fear is making way for unflinching greed in the stock market. So we're gone from absolutely some of the highest fear levels we've ever seen, marked by the likes of the VIX, which we'll see in a second, to back down to very ordinary levels in a very short period of time. The S&P 500 notched its third winning day in a row on Wednesday, and the usual barometers of investor jitters has suddenly flatlined. So we can see here the Cobe Volatility Index, the VIX, the Wall Street's so-called fear gauge, has, as you can see here in the chart, went on a vertical line when Trump came out with his tariffs at the higher levels. And now that there's mention of deals being done with the likes of the UK and China, it's literally fallen off a cliff again and has come back down to all's good here, there is no fear. The collapse has been dramatic. From April 10th to May 12th, the VIX posted its sharpest decline on record. Just after Trump's Liberation Day speech, the VIX had closed above 52, one of its highest points ever. So what is actually happening in the market? Well, ultimately, the market is literally being moved on a sentence from Trump, and one of them can drive absolute volatility in a straight up direction, and again the next word from Trump can bring it straight back down just as quickly. And I see that continuing in the near future. There is huge uncertainty out there. I think a lot of it is by design. It's there for a reason, and it's then how do you place yourself ahead of that, and what is the overall market doing with that? Well, like I said, just a couple of weeks ago, there was huge doom and gloom, absolutely on for a recession. Then the US tariff pause has led to Wall Street firms to scale back their odds of a downturn, and many bearish strategists have now turned upbeat. The more sanguine outlook has provided a welcome boon for stocks. So stocks have taken off. The S&P is nearly back to an all-time high, and it seems we're back to the races once again. We've seen Bitcoin charge forward, getting up to over 105,000, nearing its all-time high of just over 109,000. And so all seems to be well again. And again, if you look at the CNN's Fear and Greed Index, which tracks a handful of technical and sentiment indicators, has jumped from extreme fear reading 3, can't go much lower, 3, absolute extreme fear, in early April, to a 70, which is well into the greed levels and getting very close to extreme fear in just literally a couple of weeks. This is incredible movement in that sentiment. And the point I'm trying to get to here is I think we continue to see that. Usually it moves through these dials in a methodical way over time. At the moment, we're just seeing it swing left and right, and everything reacting accordingly. So that's certainly not a way or something to follow if you're trying to trade longer term, or I should say invest longer term. For trading, maybe it's something you want to take notice of. We're not trading, we're investing, and we're looking for the longer term view. So the question now is, are we in overbought territory? In other words, have we swung so far from extreme fear, very close to getting into extreme greed? Should we be considering that maybe that's it, or are we going to push on from here? Well, let's look at, I think we need to continually remind ourselves of the overall macro. And here we see a tweet from Kevin Gordon. Serious credit card delinquencies continue to spike in the first quarter of 2025, highest since first quarter of 2011, which was soon after the last economic crash. So it's climbing really rapidly. We know that there's bigger credit card debt than there's ever been before, now at about 1.2 trillion. We also know that there's huge amounts of property being put up for sale now, much more than normal. It's not being bought because mortgage and all the rest of it are remaining to be very expensive. We see car loan repayments going into delinquencies. So there's huge challenges that appear to be there to the normal consumer, and seeing as America is driven 70% by the consumer, that needs to be taken into account. So the bottom line is, are we going to see the macro numbers and what's happening in the macro environment have another say in the stock markets and crypto markets before we can push on? I'll talk more about that in a video later. What's happening with Bitcoin overall? Many people might be out there going, when's it happening? What's happening with Bitcoin? We're nearly an all-time high. It's happening. But here's what's been going out there in the sort of institutional side. It's now Trusted Custodian, Fidelity, Coinbase, BNY Mellon, major companies. You've got institutional trading with Jane Street, DRW, and Cumberland. It's adopted by giants. 9 of the 10 biggest hedge funds now hold Bitcoin. Mainstream access, spot ETFs are now live, many of them, and doing extraordinarily well. Portfolio allocation, BlackRock now, the biggest asset manager in the world with in excess of 10 trillion under assets. BlackRock recommends 2%. You should have 2% in your portfolio. Plus, corporate exposure, Tesla, MicroStrategy, and 80 plus other public companies are now buying Bitcoin as a strategy for their business. Government involvement. The US is building a strategic Bitcoin reserve, and many of its states are doing likewise. So there's, it's all happening with Bitcoin. So in other words, look around, it's already happening. This isn't something that's going to come, it's already happening. What else can we see about Bitcoin? Bitcoin availability on sale of exchanges. Over the past month alone, 57,551 Bitcoin worth nearly 5.93 billion has been pulled from exchanges. What does that mean? Usually when you pull it from exchanges, it means you're not planning on selling it, which means the amount of Bitcoin that's available to be sold is reducing dramatically. At the same time, we're seeing a massive increase in demand. What does that normally do? Investors are stacking, exchange supply is drying up, and a tighter supply has only ever meant one thing: explosive rallies. Bitcoin's going to grow, but when's it going to happen? Of course, it's already done a lot of that, but where to from here and when? Arizona and Oregon embrace Bitcoin and sweeping new laws. The US states, Arizona and Oregon, make bold moves with laws set to harness Bitcoin's potential in state-level finance. So we're seeing this happening all over the world. And as an Irishman, I certainly have to have the next one. Ireland wants Bitcoin. Well-known MMA legend Conor McGregor just threw his gloves into the Bitcoin ring, stating that the US strategic reserve, what they're doing, that Ireland should do something similar, proposing the same idea for Ireland and framing Bitcoin as a tool for sovereignty and strength. Well, I too am not an economist, just like Conor McGregor, but I have been putting forward to members of our Dáil, which is equivalent to Parliament elsewhere, that we should be absolutely considering this. So while both of us are not economists, we both have a similar mindset here as to what should be happening. And absolutely, I would love to see that happening in this country. On top of that, then we see Bitcoin surges. What's been behind that? The US and China slashed tariffs in a 90-day deal. So, it says the US and China have agreed to temporarily reduce tariffs on each other's goods for 90 days, with the US cutting its rates from 145% to 30%, and China's lowering its tariffs from 125% to 10%, easing trade tensions. So what this means is, at least now, trade can move ahead between the two countries while they negotiate an actual deal. But a deal isn't negotiated. This is just talks about talks. What will happen in 90 days' time? Will they actually get to a point where they actually can make an agreement? That's where we still see volatility out there. And there's many other countries that the US will want to do deals with as they go, or perhaps maybe I should reword that. Many other countries will want to do a deal with the US, particularly when they see them doing with the likes of the UK, the likes of China. So, but there's still huge uncertainty out there. There's still going to be volatility. And above all, is the macro environment still going to have its say in the overall direction of the S&P, the NASDAQ, and of course, crypto itself? To find out what we think on that, follow our next video for our private members to say, where do we think it's going to go from here? Is Bitcoin going to shoot the moon from here? Is it going to consolidate? Maybe it pulls back. What about Ethereum? Ethereum has absolutely taken off in the last week. One thing that I find almost comical is there's a lot of influencers out there with huge followings who, for example, when Bitcoin was going to 100,000 and beyond the first time round, they were talking about 150,000 Bitcoin, 200,000 Bitcoin. At that time, we were saying we believe this had to make a significant retrace before it truly bulls on. And we actually put in the number 74,000 as the point it would need to hit. It hit 74,000 almost exactly. At that point in time, I did say there was a possibility it could come further to 69,000, but once it consolidated there, we had a chance to really push on. At that time, the influencers were talking about, oh, the whole thing is crashing and it could go down to 30,000. Suddenly it starts moving up again, and next thing is back to 150,000, 200,000 again. So my point here is sentiment seems to sway really easily amongst influencers and indeed in Wall Street itself. Not so long ago, Wall Street was talking about a full-on recession, and now all of a sudden they're going, I know, forget that, we're back and we're good again. The overall underlying macro story does not change that fast, and I don't believe sentiment should do so either. On top of that, you look at the likes of Ethereum. We have been stating for the last 6 to 8 weeks that Ethereum was getting to a position where it was a really good buy. And when it got under $1,500, I thought this is a really great opportunity for anyone that wanted to buy into this asset, which I said at the time, I still believe is the king of smart contracts. At the same time, these influencers were referring to it as being dead, that Sui and Berachain and Solana and all these other chains were, have completely taken over from Ethereum, and Ethereum's use case didn't make sense anymore. At that time, we were saying, no, it's still the absolute king of the smart contract space, and watch this space, it will make a big move. Of course, it made a huge move. It went up nearly 50% in a very short period, and now the influencers are back talking about Ethereum going to $10,000. So my point is, be careful who you listen to. Make sure you do some of your own research along the way. And if you want to find out what we think is going to happen next, watch out for our next video where we take all this macro data and come up with what we think is going to happen next. You'll find that in our private group. You can join that by getting into wealthofwisdom.io. You can see how you can join there, and we'll see you on the video. Talk to you then.